So for those of you who don't want to have to trade as frequently, the 20 EMA is, why would you have a 20 EMA? It's all about the frequency of trading. So the 5-period moving average is going to have a lot of trading and a lot of whipsaws possibly. Now the 20 EMA on the 5-minute is a good fit. And if you went to the 15, maybe you have to have a 10 EMA to duplicate the same market movement. And so I'm going to trade the market here without stops, 1Ks, and then I got pendings here without stops to buy if it goes down to the structure level. And at the bottom, I got the histogram of the 20 EMA. You just take your MACD and convert that to. You just make this so that you force it to disregard the first number, so you're just going to have an EMA of 1, which is closed, and then you have the slow 20, and there is no signal. The signal's the smoothing of the MACD is the signal line, so you're supposed to cross that. I mean, it's bad enough, you're on a moving average, so you're lagging all that. So I just took all that lag out. And this way you can do all your divergences really easy. So if you like to trade divergence, it's very simple. You just, and I could take the histogram out, I suppose, here. I don't know. You just go like this and say, look at, this is divergence. As soon as you get this failure to complete, now it's not like RSA, you can't extend it forward. You're not going to get that wonderful kind of, you can't ray it out. You can't put a ray on it. But here's divergence. On the 20 EMA, mind you. Now, this is nothing but a detour. And after this move, you're going to look for a specific, gosh, I have to get rid of that. Oh, maybe you can see it. You just have to look for it. You can look for more oversold. You look for a failure of this divergence. But here you're waiting 5 minutes for your signals. So you'd have to start selling, I'd say, from a structure level, just from selling new highs. Like if you're really looking for the best deal on the top side, you put your first order in like this. A sell limit here. This is a 5-pip grid, so every 5 pips you're selling, and you don't get filled on this one, and it comes back, and you're like, okay, I'm cashing out of everything when it comes back to the double top, and I'm gonna reload and go long. Because if you look at this low compared to this low, this is more oversold, but at a higher price. So, and you've got the moving average touching. So here you've only got, if you follow strict rules, and of course the robot is, or you or the robot isn't going to know whether you want a 5-pip stop or a 10-pip stop, but you're going to have to run a series of 2 pips away from each other. So you get like a soft, like a Greenspan entry. A soft landing. And that's just how you got to do it. There isn't another, okay, you're just going up here. So there's no other way to really look at it. You're forced to go with what's given you. And of course here near the very tippy top, when we get way away from the moving average, we start to get another buy signal. If you connect these two here and look for the corresponding, like the worst color in the world to put on top of that. But you're looking for the corresponding mark here. Right there, more oversold, higher price, so it gives you this last gasp. But of course, you got to realize the divergence is already kicked in. And this you don't even get this divergence here. There's never really that like here is the setup. Sellers come in. Buyers are supposed to hold this top. Now, just because tops become bottoms doesn't mean that when the trend's over, it's over. And this is the floor inside on the 15, but this is all happening. So if you see this setup here, there's a sell here, but it's not a lot of pips. A robot would take that if it didn't understand the slope. Here's a trap. you're buying it, the moving average, everything's supposed to go swimmingly. And for all you know, it's going down right now. But would you really sell here? Well, if you look back here, this is where everything got started on the party. So you gotta realize this is going to be a turnbuckle. Besides, it's been going down for this has been going in straight sell off for 5 times 50 minutes straight down. Like literally, I mean, smooth, a lot of pips here. And not so much on euro dollar, but on this currency. You can't walk into this currency with the same trade plan, with the same 10 pip stop. And then, I mean, I didn't even mention the fact that all that punishment I gave the guy with a 3 pip stop, bitching about his entry, he was on the pound. Okay? Like, he wasn't even on the euro. I don't think he was. I think he was the pound. He's only traded the pound. No, he went back to the euro. But I mean, the pound, somebody sent me a chart of the guppy. And listen, you're never going to see that. You're never going to get that entry. You need a 10 pip stop just to say hello. Indeed, just to say hi. So you need a 20 pip stop. And you need to just trade one currency. You have to build to that currency. You can't buy an MG midget and drive around with a piano in it. You know, if your instrument is a mandolin, sure, right? This is why those guys were doing mandolin jams, and you know, because they're like, hey, I can put it in my pocket. It wasn't because it sounded great. Yeah, mandolin's great, but you don't see a lot of people putting a Bigsby on a mandolin going on tour. Okay, so here we are back in the dilemma of the British pound. Now this is the 20 period EMA. Now this is they rave about this. This is what the big boys use. Now they go to the 15. It's not so great, right? Because the 20 EMA is like a little too like, I don't know, it's like, oh God, it's down, it's up, but on the 15, it's always going to be about tops become bottoms, and as you have the right sizing on the stop. Always going to be that. In fact, if you fix the scale here and you go to the wrong time frame, you're not even going to see that EMA. Like, where's the EMA now? 20 EMA, right? But on which time frame? So I'm long here on 2. Pulled the trigger at the market. But I only pull the trigger if it's going down. So on the 5 minute. So if I built a position here and I bought now I didn't buy every candle that went down, because you could have maybe bought here on a limit, and you'd be underwater right now if you bought right here. You'd be 5 pips underwater. And this thing really can't overshoot the runway. So if you bought right there where that top became a bottom, yeah, you're getting clobbered. They went right through you. But what if your stop is 20 pips and you're a swing trader and this is the 5 minute? Here's the half hour. It looks like a genius trade, right? So another thing is if you're scanning with a 20 EMA, you have to look for the setups that it happens to be appearing at. And it's the half hour. You got to be, half hour looks good. For that pace of rate of change. Here it's almost pure genius, but maybe a 25 EMA right here would have been a perfect fit. Sure, you're gonna get those setups, but here's the classic divergence. Even on the half hour, now it looks like MACD. It looks to me. That's how it's the same story, right? Different day. From here to here, continuous divergence, because the trend line's not being hit. And the EMA is a soft trend line. But here you're sell, and then like, okay, well, the buyers are supposed to come in here and hold this floor. Not so much. And once you even test that, coming back to you can barely see there's a doji on the 15 here. And this is that 2618 shit they talk about. They sell a whole course for $500 over at in Power Trading. That's a 2618 entry. People say, yeah, I know what you're talking about. Yeah, you're selling the shoulder, right? Your stop's above the head. That's it. I just saved you $500. Next question. Next question is, how tight's your stop? This is a 5-pip grid, for God's sakes. So here, obviously, top. I watched this drama last night. Everybody wants to get in here now. Everybody knows it's lights out for the dollar. This was the higher high. You bought that trap, that head and shoulders trap on the 30-minute British pound. Yikes. And then, but even the guys that trade vacuum fills with sell stops with giant 30-pip stops, 30-pip stop to make 40 pips, a no-brainer, right? No-brainer for that guy. He's like, yeah, I got my pendings in here. Oh, boy, just got a huge movement. Yeah, today I think they're just going to blow that dollar out. It's going to be one of those weeks that, it'll be the first week, I would say, for trading the euro for like 2 years. It'll be the first week the euro's going to just end up at like psycho highs today, going to 107 and just sit there. People are like, now what? Yeah, you're not kidding, now what? So this will be one pissed off retrace of the euro dollar. And, but yeah, that's, and you can't stop the damn other currencies to save your life. But British pound, EMA, 20 EMA with the histogram of the 20 EMA. There's a bunch of goodies in here. Of course, so as soon as you go to the 1 minute chart, you could trade divergences on that and scalp. And that's what I would do if I was going to run a 20 EMA. I would just go to the 1 minute chart and compress it. Because now it's like a piece of cake, right? You can see the divergence. You can see the reversals. You can see the whole. Look at this creeper gear divergence. Look how long that take to. Look how long that has taken to. Oh boy, let's get a good color on that. I just hate the color. I wish it was just a gray. What happened to those good old-fashioned gray monitors? Grayscale. Yeah, let's go with the deep sky blue. Here's your divergence, and then stretch it out so you can see it. So the reversals too, it's kind of hard to see unless you get rid of the histogram, but right there, your typical, it happens underneath here though. Yeah, RSI gives a better, here's one. It's really hard to find. If you don't know what you're looking for, I guess that's the problem. It's the pullback of the oscillator. It happens in stochastics. But this is like a premium trend entry. But of course, now, if you don't take your 10 pips and run here on this 1 minute chart, mind you, the 1 minute chart, I mean, think about that. You got to have your, and that right here you're buying, right? But I'm already in, so maybe I missed my exit. Because my exit had to be, by structure rules, what's the last known doji? It's right here. So right now you'd be buying. So I buy here at the previous top. And at this point, there's no other scripts on here. I would just have this close all profits. And if I'm up on one ticket, that's how you build the account. You just have to go with the prevailing rhythm on the 1 minute. Just like buy, sell, or buy, dump, which is selling, same difference. It doesn't matter how you get in. It's how you get out that's going to make the profit. Or the loss, or just getting out. And so the British pound has, especially the 20 EMA now, it looks all wonderful here. This is kind of tough to take advantage of this sell. That's a 10 pip winner. If you're going to follow the 20 EMA. A 20 EMA in a 1 minute chart, yeah, 5 minute chart, you know what? There's only this one entry. Now, that might be plenty good. That's a huge run, but you got to love it on the 1 minute. In fact, the 55 EMA in the 1 minute is going to give you like entries that look like this. You're going to get in here because you can imagine slower moving average is going to be. And you're going to get, and as you can see, and there's a top bottom on the moving average too. If you put up a 5-period moving average, you'll see tops become bottoms. So here's a double top in the EMA. Market climax is to create that averaging, and there's a lagged double top in the EMA. Just like there's a lagged double bottom in here somewhere. I get to zoom out. But if you just picked out the let the EMA give you the tops, you've got this top and this lower top, and that's your top in price. And here's the top in the EMA, and then finally, so you have a double top in EMA. It's filtering out this giant spike. So you're really taking out the wick. All these EMAs are built on. So here's a bottom become a top in the EMA 20. But it's overshooting the runway considerably. So the concept top become bottom become top holds true on everything. Every one of these has that same let's see here. Make this make it black so you can see the damn thing. Like here's top bottom staircase in the 20 EMA. If you see this double top in the EMA, so you have your fair value picked out. We come back and retest that, and then you have this 20 EMA is the top that becomes the bottom. So the bottom's here, but it doesn't get down because you have if you have 10 EMA. So you don't have to drop down to the other time frame. Plus you have the people that are trading the edge of the channel. They're getting in at that little. So this is where you really want to get in. This is where you can say, oh, yeah, look, it's going up the stairway. Yeah, but how are you getting in that thing? Do you want to buy this window here? Are you going to get in on that's the 1 minute chart. So it's really, and then you just got to realize sometimes, hey, you know what? That's all I'm getting. So right here, if I wanted to get out of what I'm in based on what I see right now, which I see a buy, I would be buying here in the 1 minute. And if it goes up to this, I get out of whatever's a winner, and whatever's underwater, I would let go. But that's the tough part, is to get the stop right for what's going on. This 1 minute chart, I mean, there's actually a pullback in here. There's a place to sell this when it goes up. If you just consider, if you're going to babysit this, sell, 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 up into the previous bottom on the 1 minute structure, and the 20 EMA agrees here, and the confirmation people are going to put their stop here on the 1 minute. There's a sell, 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 sell. Those are all sells because it went up. You're selling high. You're going to sell at the market. Just like this, you would buy at the market every time it comes down. So you're always contrarian entry to get the best price always. So and if you go to the 5 minute, it looks good on the 5. And it's the fact that everybody, the 20 EMA is irregardless at this point, because you're really trading this fact that it's just ridiculously smashed down into this. All right, so I'm going to get out. And this is the floor that's holding on close on the 5 minute. So we definitely go lower than that. It was a perfect touch on the closing price. So I got a double bottom on the 1 minute chart. I'm going to buy another one right there. So top became a double bottom. I'm just going to buy one. And I'm going to dump As soon as we get to above here, go up 5 pips, I'm going to dump everything. And I'll just reload on pendings. This isn't a ton of money here, but it and I'm not trading with stops, so. But it's the idea. It's the idea. You see it, you nail it. Now you wait for it to retest this and just get out. That's a I would call a okay scalp. It's a 2-minute trade maybe. Even this, it takes forever to make 5 pips. On the way down here, if you would have sold any breaths it took up, so you had a few sells there. Okay, get ready to get out. All we got to do is retest that or pop above it. Okay, so there you go. Simple as that. I don't know how much money I made there because I wasn't watching the balance, but let's go to the account history and see what the last. Okay, so I think I made like $2 there or something. Certainly, and then waiting until it pops that out. It's crazy, but it's a high probability. It's like you're gonna find out real quick if you're right or wrong. But I don't know. For some, it's a lot of work. So I understand why people want to go to different time frames or different currency pairs to look for that same setup and then go, oh, let's just do that all day. But I can't do that, so I just trade one instrument. I just trade one thing at a time because I can scalp it or I can swing it. And like if you were to hold this part of this, instead of scalping this, I just held on to some of it. Okay, here's the other second target. Now I could just say, well, you know what? If I really like it, why don't I just put a buy limit here for the pullback? And you'd say, well, maybe that's too close to the market. So it comes down to the approach. So somebody asked me about the approach. Does this approach, can you lose money? All trading loses money because as soon as you pull the trigger, like if I bought here, which is a little bit chasing it, but if I bought right here, I'm just immediately down. Look, I'm down. I'm down commissions, and I'm down the spread. Right out of the gate. Pretty tight stop on this. So I'm down this 4 cents, and I'm down the spread there. Now, if I say, okay, I'm up, I'm out. But I didn't even pay for the. Now I could say, well, I really like this trade. How about I put in some more? Oh, jeez. Okay, I'm looking for a blast here. Coming to the top of the hour. What if I put a sell limit up here? Catch that on the rebound. Put a buy limit, and all these buy limits are already set. So that's it. I mean, what else can you do? You can only play what you're given pace-wise, and you could go to another currency, but what's the point? If you've got buy limits down here, you got multiple strategies running on one instrument, because you could have the same strategy across 20 instruments, but the problem there is you're going to have to change your stops. Okay, if you're running EAs, you got to change all your stops to accommodate that market. And the entry technique, because you're probably going to have to get in on limits, because you can't just survive by stop entry alone or market trading alone. You're going to have orders that you're not sure about. So the uncertainty is your friend, because you have to have these kind of arrangements where it's all predetermined. It's just a destiny trade. When you do the math, figure out the risk. That's as simple as that. Now, 1 minute chart, if you're a scalper, you have to be on 1 minute chart. So that target there, you had to get out. You had to. Right there's a doji. Everybody got out there. I got out just before there so I could walk away with money. So anytime you're scalping, this turn a scalp into a swing trade, it can be dangerous because if you're a scalper, you just see, oh, you know what? I can get back in. Very close to the market, super close. And I don't even know if you're approaching the market at that point. It's like landing a plane. Buying at the market is like you're on the ground. You don't even land. There's no approach. Your approach is the clock. I think of approach as how do you get close to something, the technique, the style. So the style and technique has nothing to do with whether you think it's going up or down. That decision there, if you know what you're looking at, if you know it's going up and you can see what the prevailing tide is, and if fast moving, if the market is going down or up in the long term, all fast moves are unsustainable. Without regard to that, but if you're selling because you are good enough at trading, you can see what's the big picture is. You can see the traps, right? So this trap's already been filled in the 1 minute. Now what? Can they re-dip in that well? Oh yeah. So anything's possible. You want to leave that open. You want to leave that option open because, see, once this thing filled here, if you had a 5 pip grid in there, you could have gotten back in again. You see how many times we chatter in a 5 pip range? There's so much money in that right there. If you've got the trade plan, now you could go trade the guppy with a 100 pip stop. And this is imagine this is the completion of your Gartley tip. This is the bat wing. And you set up a whole trade plan over there. And you got that going on. But I can't even imagine having that go on the same account. I mean, I literally jump out a window. I just can't take. How do people do it? How do they do it? Like here's a 20 EMA setup. You have a top becomes a bottom on the 1 minute with the EMA pointing up. But of course, when the pace of the market slows down, it's going to be untradeable with this stuff. With this 20 EMA is going to make you kill yourself. All this stuff here. The last night's and with a 1 minute chart, it's trades galore in here. There's nothing wrong with the 1 minute chart. It looks just like this clip the wing here. That's the bat wing. This is you don't have to break out a triangle to see this is your your D to B to C. And if your stop's here, you got a 10 pip stop, and you're fiercely loading the wagon on this based on this 1 minute window. You can see this coming in. If it comes to here, you're like, oh, I'm just going to buy one at the market. Then you see this feverish move here. I'm buying one at the market. You've locked in two. You got your pendings coming in. They're all predetermined. You're only buying here because you can see it. Oh, I've seen this a million times. Buy. Like, it's just like if you're on the wrong side of the market. And you're like, oh, fuck this thing. People that have mental stops. Who doesn't have a mental view of like, oh, it's not going the way I want it to go. Say you sold here on this trap. So if you look, the top becomes a bottom here on the 1 minute. These are very tight windows. Here's the hole that was looking to be filled. It may not look like much here, but 1 minute chart is completely tradable. You're just not trading it. You're not looking for a hammer. Like, if you're looking for a candle pattern in this shit, yeah, I get that 1 minute chart's untradeable, but you're not looking at that. Looking at the big picture of the 1 minute. If you carry this forward, this should always be support. This is a 10 pip, 5 pip window. and this is, it's got to be fair value. Everything between here and here has got to be fair value. So this whole floor, this is the floor, this is the basement. This is in the office building. This is the lobby. See the lobbies here? Okay, this is the penthouse is way the hell, and of course the bomb shelter is down there. But the top become bottom. You just got to sit there and pull the trigger. You got to have 1 minute chart. Okay, so I'd be buying right now. I missed my entry. So you see it pulled back there to the top. And, oh, so I got filled on a limit. So one of these I bought at the market, and the other one was the pullback. And now I really like it. I'm going to get in a little bit heavier there. But I'm going to dump everything as soon as we get up back. Now I guess you have to set your sights higher. But honestly, I'm just going to get out when it goes up, because if I put more buy limits in here, your total amount of risk for the day. And another thing, if you're just on one currency pair, you can see that you're always going to want to buy down here. Now look at this wick. That's a 5-pip grid. If you put a buy limit here again, all over again, and we did go down there, if you had no stop in the market, you can see how killer that trade is. You buy every 5 pips. From here all the way down, every 5 pips. You got to stop down here. This is 5 standard lots right on each ticket. Can I get a show of hands? Did you make any money on that trade? Look, it went up about 250 pips off of that. So buying new lows is really counterintuitive, because the first question is how low is that going to go? How low could that thing go? Okay, so we're going to go back to the 1 minute chart, and it's oversold on the MACD. And now it looks like they're going to crush me. So I put all these buy limits down here. So there you go. You think you're right? Look at that. But this is 1 minute chart. If I really want this thing, okay, I'm getting filled out on my limits now. Now take a look at the half hour. You could totally keep putting buy limits in here. I wouldn't think twice. And the 15, sell. It's a sell, right? I mean, it's a buy. At the end of 15 minutes here, we're going to buy. Okay, right there. We just went down, so I'm going to buy because we went down. I'm buying this. This is where we're going to, this down bottom. The 1 minute chart is inconsequential. We're still in a downtrend. Here it's sideways chop. The EMA is torturing you to death here on the 1 minute. Okay, we're going to wait till the, I'm going to put a buy limit right here on this top. I'm just going to load this up on buy limits. And if at the end of 15 minutes it is down here, I will totally buy even more. So I'm down $6. I'm in, what, 6K? Okay, so I got all these guys waiting to fill. Plus, if you're on one currency pair, life is very easy, because all you have to do is go like this. You can see everything's about to fill. And so buy limits all the way back into this fair value thing. There you go. 5 minute chart. Sellers came in. I'm going to wait another 5 minutes. If it's down, I'm going to buy at the market really hard. I'm going to buy it now. So anything we're trapped below this I'm just going to get in. So if you're trading at the market and you normally trade 100K, now I'm in about 10K there. That's how I would do it. Now you could just say, take all profits, and as soon as we come back to this floor, just take all profits and then just leave the remaining. Bank something. So the winningest trade, there is no winning trade. They're all losers right now. But we're going to just keep buying all the way to this area here. Just right mouse click. Just don't duplicate the orders. So I don't know how much you want to risk, dollar-wise. British pound's pretty fierce, though, don't you think? God, what a brutal mover. It's very pip volatile. Okay, all the way to here we're getting filled. And I'm not getting stopped at anything. It's beautiful. So that's what trading with stops looks like. Okay, now we're pretty big down, 20 bucks. Now I'm gonna buy. God, this is like the good old days. Okay. Look at that. That's just incredible. So look at this. And how would you even judge that? The EMA on the 4-hour gives you that signal. Are you kidding me? So here are more buy limits, right? Okay, so where are we at? 26 bucks. Now, if you got 9 grand that you want to risk, this is the way to go. Because the account is a stop. There's no, you're not gonna put you in jail for blowing up a damn Forex account. But you'd think, watching the Akil Stokes talk about it, that he's babysitting some exotic animal. He's worried about it dying of sleep apnea or something. Okay, Euro's definitely going up. So I figured that I'm looking for an answer on the Euro's going up. I'm looking for the pound to go down, retest this fair value zone. But you see how bad, if you think that scalp's going to turn. Now this, to me, I can see the 1 minute chart. A lot of people are going to bail there. So I could get out of my stuff. I'm underwater. I could actually get the account up and then hold on to the losers and put buy limits down there again for the retest possible. Or we just go down here and fill up even more tickets. It really depends how much. You could probably take $500, trade it without stops, and the account's a stop. It just doesn't matter. When you get the account big enough, sure, you maybe trade with stops or something, because you don't want to keep adding to accounts. Unless you take an account from 500, you get it up to 1,000, you close the whole account, and you're just like, okay, start over. Put 500 in, and treat that as a stop. Or you take out 500, leave 500 in, and that's the whole thing about what's psychologically comfortable. And trading without stops, I mean, do it all the time with a small account. You can test drive an account with 50 bucks. I could have bought 3K down here. And be like, yeah, whatever. Call me in a week. Call me in an hour. You could dump everything that's winning. And look, it's all the way back to this structure, this top, this triple top, all the way back. Look how vicious. I mean, this may be going up in the end. Like look at this double bot. This is the fourth time down here. Who's not buying down here? Okay, the euro's going up. Just took out the high of the day. Let's see what kind of reaction we get out of this. Now, ideally, we're going to blow through this floor. I would say hold this until it takes out this top and maybe, oh, there's some news or some shit coming out. It just wouldn't have mattered, you know. So if you didn't sell here, and that was pretty quick, that's, yeah, 15 minutes straight down. Look at that. It's, the ride's over. Okay. Now I stopped buying here. No more buys because it's going up. So let's give this thing some time to retrace. Come back to my stop list trading, profit list too, because I know better. I know better. The other thing is if you're trading a lot of stops and you figure you've reached your maximum ticket, you can see this guy's 10 pips from getting filled. You could just get rid of all your pendings or just leave the super deep ones, because when you range by price, you can edit that stuff. You just can't. I don't know how these people manage this stuff. They got their trading this currency and that currency. I guess it's just putting one ticket in. All right, how else could they manage all that stuff? But they'll always tell you trade management, but it's like pending order management. It's not that you get in a trade and you manage that trade. Fuck, you got to manage all the stuff you got ready to go. All the stuff you've built. That's all the plans that you built. That stuff's all pre-managed. You would assume, right? Unless you've got the old let's trade without stops. So you open up a $100 account, throw in some limits, walk away. That guy that sent me that chart, he could have done that. He could open a $100 account, throw in all those things in, and come back in 3 months, see how that trade looks. Come back in 3 hours. I trade like this on my phone. See, there's no stop on my phone, and I'm in traffic. I'm buying fucking this and that, selling that. Usually buying, but I'm like, oh, you know what? That's on sale. I'll buy that. And it just wouldn't matter. It'd just go like a circle. It's just a circle of money, really. Buy, sell, buy. Gonna sell this euro if it goes up on a tree of scattered sell limits. This is the way I'm approaching it. So I'm going to redo this demo, and it's just going to be the euro dollar. In the end, that's what it comes down to for me, because I don't want to overpay for shipping and handling typically. Now, it's definitely fun trading the British pound, because let's face it, this thing can move. Like, are you kidding me? Look at this 15-minute chart all the way back to the starting gate, all the way back. So no more buying on the 5, no more buying on the 1, no more buying. Well, you could buy here on the 15. You could still buy because it's down. Here, you can't buy no more. In fact, I have to get out here on whatever's up, and then I'll just reload on limits. So I get my finger on the close all profits, which is essentially the sell key, and just take whatever is up at that point. Top of the hour, just take off whatever, and it's not going to be like we're going to be up like $40 and get out. Just get out to lighten up the load if you are uncomfortable in this size. Otherwise, I'd say wait till the stock market opens, and maybe we could be back. We could be up 5 pips from here. It's a very conservative target, 5 pips. But you know, having you know, how dense was the order pack down here? And some of this I just bought at the market. You could see this was a big deal. This on the 5-minute chart, this cluster here, it was like big flat spot, and so we rebought that flat spot pretty heavy, and I had orders to go down there that I just deleted. So I'm coming near the exit door here, last known bottom, but not like you're going to sell there for a trend continuation down. We're just going to get out there because we know that's where the last anybody that bought that thinking that was the bottom, they're going to have to cover. So we'll cover with them at right around the top of the hour here. Huge pullback in the euro now. Definitely pitted against each other near the end of the week here. Now, these markets go in and out of sync. It doesn't matter. It's just that, do you have the right sizing and trade plan for what's going on the currency you're trading? Okay, you got 1 minute here, 30 seconds. And it's okay to sell because it's up. So there, I had a little moment there. Could have lightened up. So let's see here. 5 minutes after the top of the hour, we could get a nice screaming up move. And I think you do have to have a target. Certainly, if you make $50 in 10 minutes, $50 in 3 minutes, that's, of course, you can't really extrapolate that out to per hour. That always is something you would wish you could do. Well, if I did this trade every... Okay, we're just going to hold that through the 5 minutes after the top of the hour. Sellers came in, as you knew they would, right there. As you can see, that is the doji. So they can't hardly see the wick up there, but that's it now. Can they hold it? Buyers will come in at that last down top, and they already have. Can't see the wick very well here, but we just wicked down into this top. So anybody that had an order there got filled, and people that are long, this is always the sell. That's the 1 minute chart, so it's like literally 30 seconds between trades if you're going to trade both directions on that. And this is the floor that's supposed to hold. We expect people to bail there, and if we can get above that, we'll dump here. Expect lay the buy limits in underneath again for the pullback. Okay, so I'll go back to the real time here. So it's down 20. Now I'm down $3. And that's the big picture. 5 minute big picture. When you're day trading, what more do you need? Okay, let's get some targets here. Okay, I'm going to wait it out. Looks like she's going up. So I'm all the way back to the floor. I'm going to dump everything, and I'm going to leave a couple underwater here. Okay, so I just scalped out of all of that stopless stuff, and I'm left with a 5K. So if I really like to trade, I'm going to put some buy limits, maybe not as heavy. We could still come back here. It's not impossible for the sellers to come in and drive it all the way back down there. So that's trading without stops, British pound, 20 EMA.